Hello traders, this is Rich Derrick from Tradesight. Just wanted to take a moment here and review uh, a really nice trade that we had this week in the VIX, the VXX. We actually got long volatility a couple days before this sharp move happened downward in equity prices that caused the VIX to essentially explode to the upside here. So what I want to do is talk about the pieces that came together that pointed us towards this high probability, very profitable trade. So the question becomes, what made the VIX, which is the VXX, the ETF that we were using as our trading vehicle, what made that such a high probability long? Well, there are a couple of different things that were happening in the market that pointed us towards this trade. We talked about a couple of them in some of the other videos that we've touched base with you with, but what I want to talk about now is really putting it all together. So one of the first things that happened was that on the 17th, we noticed there was a very extreme put call reading. We got down to like 0.43, which is a really low reading, which really implies that there was just a ton of upside expected from the market. And that's fine as long as you don't get to these extreme readings, which is exactly what we got. Then the other key piece of information we got just a couple of days later, and that was with the 10-day trend, there was a very acute overbought condition developing, and that really climaxed on the 19th, where the 10-day average of the New York Stock Exchange trend recorded a climactic 0.76. Threshold usually for a terminally overbought condition is 0.85, and we were almost almost 10 cents below that on the trend, which is very unusual, and that was actually really the lowest reading of the 10-day trend all year. So the combination of the put call ratio with the climactic reading and that very low 10-day trend reading really led us to believe that a very sharp reversal to the downside in equity prices was close at hand. So what we did was I took a look at volatility, and what we wanted to do was if possible, find a way to trade this setup via vol, because volatility can move very quickly, especially at this time of year when traders might necessarily not want to liquidate positions, but rather look for something else to protect themselves if they need to take something, and rent it on a short-term basis to give them some downside protection. So what this does is this drives the volatility ratio from the options models up. What the VIX does is the VXX trades on a short-term tracks on a short-term basis that volatility. So as the volatility was expanding and puts were now being acquired and as calls are being dumped, that blew out the volatility portion. What happens then is the VIX goes up, and as the VIX goes up, all the other ETFs that follow and whatnot will follow suit, and they do it in a very aggressive and can happen in a very quick manner, and that's what happened here. So now that we have this high probability setup, what's the action you need to take? Well, you still have to find a legitimate entry. You can't just say, okay, well, I'm just gonna get a long volatility today. What you have to do is you have to find some kind of a trigger, some kind of event that will get you into a trade in a professional manner. And what we found was that in the VXX, there's a really interesting setup where when it crossed over a very nicely defined consolidation from the prior day and went above 2850, it was really set up nicely for a clean breakout, and that's what we got. All right, so let's talk about the put call ratio and the 10-day trend just to kind of go over this in a little bit more detail. Right now, here's a chart of the 10-day. I'm sorry, this is the put call ratio. What we have here is whenever you get down below this threshold of about 0.5, that gets into a climactic area where the overall sentiment in the market has become extremely bullish and poised for a turn, and vice versa. When you get these pops to the upside in this ratio, that means there's extreme amounts of pessimism and you're generally poised for a reversal in stock prices to the upside. But what we're looking at right now is we're looking at this downside reading here in the put-call ratio, which they don't come along that often, but when they do, they're notable. And usually when you get these readings like this, there's a very sharp turn in the market within 48 hours, and we definitely had that with the put-call ratio here. Now changing the chart, here's a look at the 10-day trend. You can see that here's the 0.85 threshold depicted on the chart. Once you get down to that level, that is a very, very overbought condition in the market. This works in the opposite direction, and when you breach this 0.85 line like we did just not that long ago, and you get this climactic reading like this, that means the market is extremely overbought. So the combination of the 10-day trend here with the put-call ratio coming together like this at the same time really led us to believe that there was a pretty aggressive move about to come in turn equities to the downside. Okay, now here's the VXX chart. This is the ETF that mimics the short-term VIX or the VIX, if you will. What we looked for was, now that we had these climactic readings in place from the 10-day trend and also the put-call ratio, we're looking for a legitimate entry. And you can see that we had kind of this swing low here, just above 28.50 on the chart. We had this huge drop to the downside when people were very, very bullish and just dumping the VIX. What we wound up doing was, over the course of the day here, we set up this little consolidation range. The high point of that range was about 28.50. This is the 65-minute chart or the hourly chart. So what we're looking to do on this subsequent day here on the 20th, we're looking to get long volatility via the VXX when it crossed above 28.50 and got above this consolidation area. Once that happened, we were stopped into the trade long, and we're looking for a very, very nice move to the upside, and we certainly got that. Let me flip to the 15-minute chart to give you a little more detail. Now I've just toggled back down to the 15-minute chart. Same pattern, just a different time frame, smaller time frame. You can see that here is that really, really nice consolidation area, which was it's even easier to see here on this time frame chart. We had this strong candle to the upside. We took it out in the first 15 minutes of trade. Never even really were tested with a long entry. We closed up here on the first day of the trade, well into the money. Came into the next day, kind of went back and forth in what we like to call a measuring day, where the market was just measuring off the range expansion or reversal move from the prior session. That's over here. So this is just a little bit of a measuring day. So we're still obviously in the money. We actually even closed up a little bit more in the money than the prior settlement. And then of course, previous session we had the news from Washington, and all of a sudden traders were a little bit uncomfortable with positions. They were looking to buy some protection. The good news was we were already long volatility, which is what they needed to buy. So as of the close, we're about just about 4 points in the money here. That's good for about 14 or 15% on this move just in 3 days. So this was how we approached this trade. We noted from our internal analysis of the market that there was a high probability that we're going to get a very sharp inflection. This is the way we chose to play it, which is a very aggressive way and also potentially a very profitable way to play it. Obviously the market hasn't moved that much this soon. So we have real nice winner on the books. Took partials along the way, still long some volatility. This is something that we do from time to time, and if you have any questions about this, feel free to stop by the Trading Lab, take a trial. You can ask the analysts questions in real time, and we encourage you to do so. Thanks for listening, and again, this is Rich Derrick from Tradesight.